Good morning, everybody. Hope you're doing well. Sorry we missed yesterday. Radio station had a slight issue there, so technical problem, so we didn't make it on yesterday. But glad to be back today as we get to kick off earnings season and the banks reporting. We'll have more than that when Scotty joins us here coming up next. Remember, we continue to hit all-time highs. The question is, do you know how much risk you have in your current portfolio, and are you ready for the next leg down? If not, give us a call to find out exactly how much risk you have in your current portfolio, 863-382-0037.
Point seven, the beauty's where you find it. That's right. Lady A on the way with a Grammy Award-winning tune, but Phillip's on the line. A lot going on this afternoon in the world of investments. Let's go to Statler Financial Services in Sebring. Good morning, Phillip.
Hey, good morning, Scotty. Glad we could make it back together today. Yesterday was a lackluster day anyway. I mean, we did manage to hit a few new highs across the board. So let's kind of recap that before we kind of jump into everything else that's going on. So we had the Dow up 126 points to 34,996. That's a new record close. It's been a little higher than that intraday, but that's a record close. The NASDAQ closed up 31 points to 17,733. Again, I think that was a closing record too, if not close to it. S&P 500, crazy day yesterday, up $15 to $4,385. Again, another record closing day. So crazy how we keep hitting these intercompany or interday highs and closing highs as we continue to just see the market going crazy. As a matter of fact, that brings me to this article before we kind of jump into some other stuff. And this is obviously this is somebody's opinion, an analyst opinion, somebody that's in the business. But the headline caught my attention, Scotty. It says, "This feels like 1999. Global startup funding frenzy fuels fear of a bubble." And I don't know if you can remember back to what investments were in 1999, but I can, because that was the gateway into the first bear market I had in this industry.
I see. Okay. Yeah.
And so 1999 was the dot-com bubble,
right,
in 2000. And so everything, people were just paying astronomical numbers for these companies that had no revenue. And what they're saying here is that we're having some of the same things here. We're having people buying companies at outrageous numbers who aren't really generating even a profit yet. And so just giving some concern there as to what could happen. Do we have a bubble building? Nobody knows, Scotty. Everybody has their conjectures, but we continue to see all-time highs, and a lot of us sit back and think, how can this continue? Will it continue? And what's the reason for it? Because there's not any fundamental reasons there for this thing to keep going up and away. So just some concern, and that makes us even more conscious of how much risk folks have in their portfolio, because it could get ugly real quick if something happens and this thing starts to drop. So just of course, my opinion of what we're looking at there. And we kind of have, Scotty, the first numbers coming out for the third quarter, or actually looking back at the second quarter, as to what the inflation numbers look like. And they were up there quite a bit. We had the consumer price index, which is the thing that kind of gauges what you and I pay for stuff. It measures that. And so it was up 0.9%. They expect it to only go up about 0.5%. And looking at the annualized number really gives you some concern, because the annual increase as of June is 5.4% increase in the consumer price index. That's a big number. They only expect it to be up by 5%. So,
okay.
But so that means we continue to pay more for stuff. That 0.9% increase, I think I saw somewhere that's the biggest 1 month increase since I think I saw June or something of 2008.
Wow.
So
Yeah.
we have to go back a long way before we can see those kind of numbers in the
Yeah.
consumer price index.
I know all you have to do is take a trip to the grocery store, Philip. Prices are going up. I mean, I've noticed that for a while now. So, yeah, I guess it's becoming a thing maybe, huh? How big of an effect is this going to have on the market, you think?
They are. Well, I will tell you, at least right now, it's pushing them downward this morning since those numbers came out. The other places I'm noticing it is, trying to plan vacation. Um,
Right.
Hotels are just there's no price breaks now, Scotty. You're paying full boat plus. I mean, you want to go to the beach and spend a weekend on the beach. It's expensive. It's just getting
Right.
outrageous out there. So we're seeing across all avenues of everything. So we'll have not much tomorrow. Well, tomorrow we do get the producer price index. So that tells us how much producers are paying more for their stuff. So that'll be a number too. That'll be important
Okay.
as we continue to look at the economics of the macro side of things. And so we do have the start of earnings coming in. And as we always say, we lead off kind of with the banks. The big banks kind of lead the way. And this morning we have JP Morgan and Goldman Sachs that reported before the market opened up this morning that we had their details. So JP Morgan, they beat by a little over 50 cents a share. Came in at $3.78 earnings or profit for the second quarter. Revenue top forecast. Now they got a lot of help because of investment banking fees, and they were able to reduce their loan loss too. They didn't have the loan losses they expected in the second quarter. But they're just not they're not getting much help from all that this morning. They're down about 0.75%. About $11 off of their 52-week high right now.
Okay. All right.
The next bank we have is the Goldman Sachs, and I think, if I'm not mistaken, this is a record quarter for them. They made $15.02 a quarter. That was almost $5 more than expected per share.
Wow.
Yeah,
Yeah,
huge number. Revenue was ahead of forecast as well. Again, they've been able to have a surge in their global deal fees, putting together those IPOs and those type of things like that. They've been able to make some money in that area. They are trading up today, up 1.3% right now, still off of their 52-week high by about $8.
Okay.
So we have a couple non-banking things. We got PepsiCo. Now, PepsiCo is a good gauge of a couple different industries. One is the beverage industry. The other is the snack industry, because they do both.
Right.
They have snacks and beverages. And so they raised their full year guidance, their forecast for the year, because they had a good quarter. They came in at $1.72 a share, which was 19 cents ahead of estimates. They increased their North American beverage sales. I guess people are still staying home, so they're drinking more there. And so good news for them. They're up almost 1.5%. They'll actually open today, Scotty, if they continue at this rate, at a new 52-week high. Right now it's at 51.66 a share.
Okay.
Then let's see what else we got. We got one more for you this morning, and
right.
it goes to kind of the ag industry. The food producer, ConAgra Brands, they beat by 2 cents a share, came in at 54 cents. Their revenue did top forecast as well. They however, did come out and cut their 2022 full year forecast. And they're saying they're looking at inflation, and inflation is going to be a problem for them. And so they have come in and reduced their forecast for this next year. And it's hitting them kind of hard this morning. They're down 3.7% right now. So
Okay.
yeah, not a good start for the day for them.
Okay. All right.
Um,
So do you think, Philip, that the Fed, I mean, is the government, you think, how concerned are they at the highest levels about inflation? Do you think there could be a significant change in policy anytime soon?
Unfortunately, Scotty, I don't. And
Uh-huh.
here's why. The Fed came out last year and changed their interpretation or their process of how they're going to look at inflation. The
Okay.
magic number for them was they wanted inflation to be somewhere around 2.5% a year.
Okay.
Well, what the Fed came out with, I think it was end of last year or the third quarter last year. I can't remember exactly, Scotty, but they came out and said, look, we're not going to look at it year over year, quarter after quarter. We're going to look at it on averages. So
Hmm.
we're going to look at it on a average basis, and we want the index, the inflation, we want it to average 2 to 2.5%.
Okay.
So that
Gotcha.
means we could have 0 and we could have 5, and then we get a 2.5. So, Dave and I talk about that periodically, that we don't like that, but it is what it is, and that we don't see the Fed really taking much action until they get to that average of
Yeah.
2.5%. And we're seeing, the 10-year Treasury down significantly. I mean, it's up a little bit this morning, but it's down from that $1.76 or so. Right now, it's like I'm not dollars. It's the yield's at 1.37 compared to the high we saw. I think it was last quarter of 1.76. So that's having some impact on the markets too.
Gotcha.
And
Okay.
so
All right.
we
Well,
look at and we continue to see some falling off in the indexes as we get ready to start this morning. We got the Dow down $84, which is about 1/4%. And S&P 500 is down 0.3%, almost $13. And then the Nasdaq's down 1/4% right now also. So we do see some numbers going down there. On the commodities front, it's a little bit of a mixed bag on precious metals. We have silver down 0.1%, gold up 1/4%, and then crude oil is flat right now, but it's at $74.11 a barrel, Scotty, and that's just a pretty high number. We're getting close to that 75, which means we're going to see gas prices going back up if we stay at this range.
yeah. Oh boy. Okay. Yeah. What else you got for us, Philip? I know. Well, it's okay.
It's one of those things, Hey, that's really about all we have in the way of macro and earning stuff. But I would remind folks that there's more and more analysts that are blowing that horn that, hey, we're seeing some all-time highs. There's no reason for these highs, which makes me think people probably aren't taking a good look at how much risk they have in their portfolio.
Right.
And so it really and truly will pay folks to get a second set of independent eyes to really look at and measure the amount of risk they have in their portfolio. That's why we do our financial x-ray. Folks, look, if you don't know what it is, give us a call and let us help you determine how much risk, number one, you should have in your portfolio, and then number two, how much do you have in your portfolio? Give us a call at 863-382-0037. Check out our website at statlerfinancial.com. And then join us this weekend, Scotty, for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
We will do that. Philip, always a pleasure. We'll do it all again tomorrow. Have a great day.
All right, man. You too.
All right. It's Statler Financial Services. From the pitch.
Hey, folks. Glad to be back with you today. Hope you had a great weekend, and I hope this week is off for a great start for you. We'll continue to watch the markets and bring you an update tomorrow. Hey, in the meantime, if you need anything, if we can help you with your 401k, your financial portfolio, any of those areas, please give us a call, 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow. Bye now.